American businesses tolerating high prices in recent years could fuel further inflation acceleration, Richmond Fed President Thomas Parkin made his comments yesterday. His colleague, Michelle Bowman, serving in the Board of Governors, said that rate cuts would be inappropriate in the near future. In the context of hawkish remarks from Fed's policymakers, Wall Street indexes pulled back from the highs printed at the end of the last week. While the Federal Reserve is determined to maintain high interest rates to ensure disinflation, US stocks remain under selling pressure. Investors are worried that the US stocks are currently overvalued. Besides, investors have detected imbalance in the stock market. And the thing is that the rapid rally of the S&P 500 is mainly driven by stocks over 7 heavyweights. Another cause for concern is uncertainty in the US banking sector. After a mini crisis in 2023, New York Community Bancorp acquired the collapsed regional Signature Bank. 2 weeks ago, the company astonished investors, reporting unexpected losses in the final quarter. Following the warning, shares of a New York Community plunged almost twice, and later on they rebounded, but investors were discouraged by the bitter aftertaste. Investors neglected any signs of a recession in light of the upbeat macroeconomic data released in a few recent weeks. So, the major stock indexes conquered historic highs. The Nasdaq topped the landmark level of 18,000 yesterday. Japan-traded Nikkei closed at the highest mark in the last 34 years. Thanks to strong performance on Wall Street and the weakness in the Japanese yen, the index spiked to 38,300 points. The ZEF Economic Sentiment Index was published in the Eurozone. The reading climbed to 19.9 points in February, the strongest level in the last year. Sentiment among large investors improves amid hopes that influential central banks will begin monetary easing this year. At the same time, investors moderated their expectations for rate cuts. For example, in December, the market predicted 5 or 6 rounds of monetary easing in the United States, and now the US regulator drops a hint about 3 or 4 rate cuts in 2024. In fact, actual policy decisions will depend on incoming economic data and the geopolitical situation. The US dollar and the euro respond to the fresh economic data in a different way. Investors have elevated expectations for the US economy. Hence, the greenback needs stunning economic metrics to extend its strength. Unlike the greenback, the euro gives a positive response to any better than expected figures amid the low morale in the Eurozone. Today, the euro-dollar pair reacted exactly in the same way to economic data from Germany and grew to 1.0790. The euro's rise was interrupted abruptly by the fresh US inflation data. The euro-dollar pair took a nosedive instantly, and the price sank from the previously tested level of 1.08, which now acts as resistance. As we expected yesterday, this level remains critically important for the euro's growth. For this, the euro needs to settle above 1.08. It has not happened so far. On the contrary, the euro-dollar pair tested again a local low of December. In the case the instrument settles below 1.07, the euro could gain bearish momentum. Otherwise, the area of 1.0700 and 1.0730 could serve as support for the euro. The annual CPI in the United States again declined to 3.1%, the same level as in November. The actual index is higher than the estimated 2.9%. The core CPI also surpassed the consensus. The core index excludes volatile food and energy prices and therefore serves as an inflation barometer for the Federal Reserve. The core CPI came in at the same 3.9% as in December. Analysts had projected a decline to 3.7%. Before the Federal Reserve begins cutting interest rates, the ECB would announce more than one rate cut. A delay in rate cuts in the US could dampen demand for oil due to the slowdown in economic growth. Meanwhile, oil prices gave a muted response to the US inflation data, and crude oil is trading flat. What can set the oil market in motion is the news from the Middle East. The situation remains the same amid the lack of news. Oil is still trading above $82 a barrel with a slight bullish bias. As the Brent crude futures are trading above $82, it confirms traders' interest in long positions. Traders will increase long positions after the price climbs above $85 a barrel. Until then, the price growth could slacken due to some technical factors. Here is a market review by InstaForex analyst for the Tuesday, February 13. Join our conversation, ask any questions, and share your viewpoints. Don't miss our videos. The reliable information is the key to success. See you online tomorrow.